Assalamu alaikum friends, welcome to question number 29 from your SBR revision kit. So we have finished section A questions, now we are moving to section B questions, and section B questions are your question number 3 and 4, and they are worth 25 marks each. Okay, so in section B also we have one question where we are going to have 2 professional marks. Okay, so this question is a bit tricky that we are going to do right now, Corbel. It is from your September December 2020 paper. The reason is because it is accusation of an intangible asset. Okay. So before we go in detail in the case study, as you can see, accusation of Jangi, accusation of perfume brand. Okay, it's about relating to brand. Then they are planning to close and sell some stores and their primary store, and now requirement. If you see the list of requirements, it's very big. Right, for 25 marks. So we don't have the 2 professional marks in this question because your section B can be any question 3 or 4. Okay, but they have 25 marks both. So let us read what is your requirement A. Describe the main challenges in recognizing and measuring intangible assets. So this is relating to the challenges regarding intangible assets, such as in this case, what is your intangible asset? Brand. For 5 marks, you have to describe. Okay, part B. Under part B, these are the 4 things. Okay, you have to discuss the following accounting issues relating to their company's financial statements for the year ended in accordance with the IFRS standard. Okay, they might be having same accounting standard or different accounting standard, each one separately. So as you can see, 4 6 it will be around 4 to 6 marks each. First one, whether the Genji or Jangi brand name will be accounted for separately from goodwill. Should you account for this brand name separately from the goodwill on accusation? Number 1. Number 2, and whether it should be accounted for as a separate cash generating unit after the integration of the manufacturing units. So they are going to integrate the two companies, their brand names and all. Okay, the case study is about that. So because of that, do you have to account for separate cash generating unit or not? Okay, for 4 marks. Second, how to account for the intangible assets with indefinite life. If your intangible asset is having an indefinite life, how do you account for it? And whether the Locust and Clara perfume brand names can be regarded as having indefinite life. So there are 2 perfume brand names, one is Locust and the other one is Clara. Can you say that they are going to have indefinite life? You have to say that in your answer for 6 marks. Then, how to account for the proposed closure of the 6 stores and the suggested closure of the remaining stores. Okay, the 6 stores and the remaining stores. 2 things are there. How to account for this? And finally, the 4th one, whether the primary store should be tested for impairment at 31st December 2007. And so if you see, there are so many requirements, even a requirement for 4 marks, under that there's another requirement. 2 requirements are there. Okay, so you have to identify the separate requirements, small requirements. And whether the primary store should be tested for impairment, it looks like that all questions are very similar, right? Brand name, intangible, impairment, but it's not. And whether they should be tested for impairment, and whether the internet sales can be attributed to the store for 4 marks. So you can decide whether you're going to do A and B. Okay, but I would suggest follow the order. Okay, A. So you have to describe the main challenges in recognizing and measuring intangible assets, such as brand. That means according to this case study, this is not general. Even though it looks like general, you have to be specific and talk about the brand. So you have to read the case study for this. Okay. Okay. So if you see here, okay, we don't need all this the primary store, the plan to sell and close stores. All those things are not needed for our first requirement A. Okay, so if you just read accusation of Jengi, that should be enough for you to answer your requirement A, because most of it is knowledge. So Corbel trades in the perfume sector. Which sector? Perfume sector. It's an intangible asset sector. Because the brand name, okay, perfume is all about brand. Don't think that perfume is that physical perfume that you are paying the price for. Perfume is all about brand. If you have been using perfume, you know this better, right? That you always prefer some branded perfume, even when you buy for yourself and even when you have to give it to someone as a gift. It's all about brand, which is the intangible asset. It's not about the perfume itself. So they trade in the perfume sector. Another thing, do not panic when you see words like perfume sector like this, because most of the candidates they keep telling me that I know nothing about perfume sector. I don't know how they operate or whatever sector is given to you. So do not worry. No one is asking you that you have to know the in-depth knowledge or details on how a particular sector works. Okay, because most of it is not about the sector that will be asked from you. Okay, it will be about your accounting standard related to a specific thing, for example intangible asset. Then using IS 38, how do you account for it? So it will be about that. Okay, this is just a background they are giving. Every question needs a background for our company. Okay, that's why they are giving it. But perfume sector, if you know briefly about a particular sector, it becomes very easy for you to write your answers also. You can think also from various angles. Like perfume, I know it's about brand. Brand is an intangible asset. Hence, I know IS 38 will be heavily used in this question. Okay, are you with me? So it has been it has recently acquired a company for its brand Gengi, which purchased two additional brand names and has announced plans to close its Italian store. So they are buying additional brand and they are closing some of their stores in Italian. Okay, and they have opened a new store on a prime site in Paris. So they are closing somewhere, they're opening somewhere. Okay, they're buying additional two additional brand names also in the same year. Everything is done in the same. So this four lines will give you the background for the rest of your case study. Okay, and rest of all is just the detail of that, where you are planning to buy, where you are planning to sell the store, what are you doing with the brands. That's it. That's why reading background is very important. It gives you an idea even if you haven't read the everything. So now we are going to go in the detail. Accusation of Genji. First of 10 2007 acquired 100%. Both companies operate in the perfume sector. They intend to merge the manufacture. Both operate in the perfume sector. That's a good thing. Integration will be easier. And they intend to merge the manufacture of the J&J company's products into its own facilities and close their manufacturing unit altogether. Merge their manufacturing unit with your company, Corbel company, you means Corbel, and just close it. So the J&J's brand name is well known in the sector. Why are you doing it? Because you just want their brand name. Because their brand name is well known in the market, in the sector, which retaliate at premium prices. Customers pay premium prices for it. And therefore, for the Corbel, it will be an advantage to use their brand. Will continue to sell products under the J&J brand name after its registration has been transferred and its manufacturing units has been integrated. So whatever the goods that Corbel is going to sell, the products will be under the J&J brand name only. Okay. So the directors believe that most of the value was derived from the brand and there's no indication of the impairment. No indication of impairment of the brand is there. And they believe that most of the value is from the brand. That is your intangible asset. So now you have to say why it becomes hard for you to measure and value intangible asset. For that, you don't need other information. Okay. So we can quickly go to the answer. But before going to the answer, let us see some key answer tips. So this question requires application of a range of core IFRS standard. Core, it's very important. Not small standards, core standard is asked. That also range, not just one. Okay. For example, IS 36 is asked, which is impairment. IS 38 is asked, which is intangible asset. Even IFRS 5 is asked for planning and selling stores. Three standards. All these three standards are important. Okay. So now, first we are going to deal with IS 38 intangible asset for 5 marks. For 5 marks, how much you have to write? 1 point will give you 1 mark. So 5 points you have to write. Now it's up to you how you're going to write. 5 points in 5 separate paragraphs or 2 points. It's up to you. 2 paragraphs, 3 paragraphs, or whatever paragraphs you want to write. Okay, if you see the answer, this is the model answer. Okay, and we have IFRS 3 business combination. So two things. It just looks from outside that is only about IS 38 intangible asset, but IFRS 3 is also there in the answer. This hidden thing is what you need to find out. If you have the skill to find out the small standards hidden under the major standard, you will get more marks for yourself. And this is something which I cannot teach, or no one can teach you to do. This comes with experience, this comes from your way of interpreting a question, and this comes from yourself. You need to work hard on it. And it's not very hard as you think. With practice it will come. Why IFRS 3 business combination? Easy, because this, look at the scenario to understand. If you ever want to get a hidden standard, because it's an accusation. You are getting this brand if you are acquiring. That's why business combination. When you acquire, it's a business combination, IFRS 3. Okay, so this gives you an idea. Okay, so two standards. And 5 marks is allocated among these two standards. It's not just only about IS 38. If you see, the answer is definitely longer than you are supposed to write. Okay, so I'm not going to write line by line, but main points that you need to cover, I will explain in your answer. Now it's up to you. You can just twist and turn and write in your own words. But main theme you have to understand. The main points. Why is it so like this? Why it is recognized in this way? Okay, because you can approach this question, it's an open-ended question. You can approach it in whatever way you want. As well as you have to discuss the points also. Okay. Arrange it in any way, but those points has to be there. Okay. So here are some. This is a model answer, ACCA model answer. So do not panic so much that they are so perfect. How can, so you can never come to that level. I'm not degrading you or saying that you cannot, I'm not discouraging you, but it's a model answer, right? You will always be missing out some or the other way. The points that they have wrote. Maybe it will not come to your mind, but that's okay. As far as you write 60 to 70% of what they have written, the points that you have heard, you're on the right track. But if you're not writing any of the answer, none of your points are matching with the answer, then it's a sign of concern. You have to be concerned for this, right? So now, why? Tell me some points. I'm not going to read this answer. Just tell me why. Maybe I will give you a minute to sort out why. If you see the answer, this answer also is in many different paragraphs. How many paragraphs? One, two, three, four, five. 5 paragraphs. Okay, it's pretty big enough, right? For 5 marks, this is very long. 5 marks means you have to spend 9 minutes. So how? Why it would be hard? Why do you think intangible asset is hard to buy? It's a challenging for you to measure or recognize. You can come up with your own idea. I'm giving you 1 minute. Come on, think. Why? See, this brand, okay, sometime for some intangible assets could be of two types, okay. I bet you also must have come up with similar answers like this. Intangible assets are of two types, okay. I will make a diagram here. Intangible assets are of two types. One is you have bought, you have acquired it. The other one is internally generated. Internally generated means something over the time you have built up that brand. You didn't get it. So for those assets, measuring it is very hard. How do you measure? How do you put a fair value for those? How do you know how much, what is the amount of your brand or the goodwill that you have generated over the year? It's very hard. There is not a price. You will not get the price in the open market. It's hard to find fair value. But for bought asset, that's what exactly the first line says. This thing, this paragraph is not needed. Omit, don't write, don't waste time. This is just the repetition of the question, what the question asked. The challenges involved in recognizing a machine intangible asset or blah 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 blah. It's not needed. Directly you can jump here. Start with this paragraph. Okay. So according to which standard? IS 38. Mention the standard. Intangible assets, what do you measure it at? You recognize it at cost. We'll go to measurement later. First, start with the recognition. Recognition comes first. So you recognize it at cost. In fact, any asset you recognize it at cost, whether tangible, whether intangible. Okay. So when you have purchased any intangible, it's very easy to do. That's why purchased Intangible. It's easy to find the cost. Because you purchased, that is the amount you paid. You know how much amount you paid. So it's easy that this is the cost. But what about those that are internally generated? Brand is one of it. Brand is something that most of the time is internally generated. For that you have to find the cost. So IS 38 has a rule regarding this internally generated. Always see whether the standard has some rule regarding it specific thing. We are focused on this right now because we have to discuss about the challenges. Challenges comes here. Internally generated intangible asset. IS 38 says about that also. So you see how I am going from one line step by step from one line to another line. So from this I will get a flow of my answer. I know that after this line I will write this line. After this I will write this. This is how I write answers. Okay. Immediately if I think about the whole answer as it is the big paragraph, exactly this is what I'm going, you will never come up with an answer. You first have to start with what? That intangible assets are recognized at what? Recognition. Start with the recognition part. It is recognized at cost. What are the two types of intangible asset? This and this. Easy for this one, not easy for the other one. What does the standard say for internally generated? So I already got 4 sentences to write. I'm answering. You're just asking one question at a time. And you are answering. Basically, you are answering. In your mind, you are questioning. Recognition. Number one question is recognition. What do you recognize it at? Cost. Answer is cost. That's what you are writing here, right? Recognize at cost. So you are just doing the answering part. Second line will be easy for what? When you're buying any intangible assets, difficult for internally generated, IG. Correct? Third sentence will be what IS 38 says about internally generated. That's how one by one, coming from the previous sentence, you will get your next sentence. Coming from the previous sentence, you will get the next sentence. From the second point, I will get the third point. From the third end, I will get the fourth point. You have to link like this and make up an answer. But it has to be relevant, right? And this is relevant because it's about challenges. So IS 38 prohibits. It says IS 38 says you cannot recognize internally generated intangible assets in your statement, financial statements. This is regarding your internally generated intangible assets we are talking, not the assets that you're buying. Okay. Except, but there is an exception to that. Whenever there is some exception in a particular standard, talk about that also. If you can remember, most of the time exceptions very hardly people mention it in the answer or forget. For example, in like this. But if you forgot, it's okay. But good thing, it's better always that you remember the exception. In case you forgot, then it's okay. Because in this case, if it's not a development activity, then if you don't write also the exception, it's still okay. But if it's a development activity and you say do not recognize internally generated intangible asset, then you are facing a problem there. Okay. So exception, if in your answer you need the help of that exception. If your answer is an exception, for example, your one is a development activity, then you have to write that exception. Okay. So in some cases you have to write, you have no chance, you have the obligation to write. Sometimes it's your choice. You if you can remember, you write. If you forgot, it's okay. But I always say, I never encourage you to forget. I always say include. Okay, wherever you can. If exceptions are there, sometimes except no exceptions are there, they don't accept any exceptions. But most of the accounting standard, exceptions are there in every standard. Okay, because otherwise it will be very unrealistic if no exceptions are there. So except those arising from development activity. Okay, that means even if it is internally generated intangible assets, some cost is there and those are development cost, you can recognize it because the cost of the asset cannot be determined. Okay, why you cannot recognize internally generated intangible asset? You cannot determine the cost. So first para I already got. Now we are coming to what? We are coming to the measurement. So the first paragraph is about recognition part. If you see, this is how I get my paragraph. Recognition only. Recognition and measurement are two separate things. because first comes recognition. After it's recognized only you measure. If it fails the recognition test, there is no question comes that you have to measure. You cannot measure when something you cannot recognize it. So first it has to be recognized. So in this case, it's hard to recognize the cost for the intent. Now we are coming to the measurement stage. Measurement. Second paragraph is about measurement. Remember your IS 38 rules. Are you making any reference to the perfume industry? No, just because the opening line says it is in the perfume sector. So don't panic. Most of your answers are like that. Okay. So intangible asset, after once it has been recognized, you see, once it has been recognized, after recognition comes this. Or you can say after recognition, after intangible assets are recognized, it can be measured using two models. Remember the two models that intangible assets can be measured. One is cost model, one is revaluation model. Even for your IS 16 also, property plant and equipment is the same thing, cost or the revaluation model. Cost model means using cost, revaluation model means fair value. It's as simple as that. But cost model means what about amortization, impairment you deduct. So cost less any amortization because intangible, and impairment also. Impairment can come for intangible assets, right? Your goodwill and all. But don't go and write cost less depreciation there. Like depreciation slash amortization. There's no depreciation here. This is intangible assets, amortization. If revaluation, from the fair value you deduct the amortization and impairment. Okay. Make sure that you write these things in the bracket. Don't just write cost model or revaluation model because we don't know what is cost model and what is revaluation model, how they are different. Looking at the bracket, I know it's different because this changes cost and this is from fair value you are deducting. Now, what else comes? When you measure intangible assets, cost. It's not only about recognition and measurement. What about the useful life? You have to find amortization. So you need useful life also. So now third para we are talking about the useful life. Okay. Whatever model you choose, whether cost or whether evaluation, you have to find the useful life of intangible asset. But this is subjective. Finding the useful life is subjective. This is for tangible also, it is subjective, okay? But we are worried about intangible only now. Correct? Subjective. So it's a challenging. It's an issue. It's a problem. Okay? Why? Why is the question? Because how normally we trade tangible assets, property, plant and equipment, machinery, car, we buy and sell openly in a frequent market. We know the price. But intangible assets, they are not traded on a standalone basis. And they are, so there is rarely any active market for them. You have to mention about this active market. For intangible asset, it is not traded very frequently, like in a large volume. And also active market is very less for that. You have to mention about active market. Why? Fair value. You told revaluation model. For revaluation model, you need fair value. And for fair value, you need an active market. Your IFRS 13 rule. Okay. So for intangible asset, we don't have that active market. Very rarely we have. Because of this, this makes it very difficult for you to determine what fair value. If no active market, determining fair value becomes difficult. And if you cannot determine fair value, you cannot use the prohibition. IS 38 prohibits the revaluation model. Intangible assets. Okay. Because you cannot determine fair value. No active market. Intangible assets are not traded. Can you trade your brand? Especially internally generated brand, can you trade it? No. Can you find the fair value for that then? No. Then IS 38 says don't use a evaluation model, even though option is there. Measurement is two model, but they prohibit that also. This is for intangible asset only. Okay, so this is under your IS 38. Now we are going to take help of IFRS 3 also. IFRS 3, when you are saying, you have to bring, how are you going to write answer, opening answer? Bring forward from your IS 38. So it was noted above that internally generated brand. Okay, it is not recognized in the statement of financial position. Not recognized. So start from this point. This you have already mentioned before. Something like this. When you come to the next thing, make sure that you take help from the previous line of sentences or paragraphs or anything like that. Rather than starting fresh and just saying IFRS 33 is this, according to this, you have to do this. Okay. Again, exception is there. What is the exception? One exception to this rule. That means this rule means what? When it's a business combination. When it's a business combination, there's an exception to this rule. What is the exception? That you can recognize internally generated brand also in the statement of financial position. That is the meaning of exception. And this comes only when it's a business combination. That's why we are taking help of IFRS 3 here. Okay. So in this case, what's happening? They are acquiring control over another entity. Merging, no? They're merging it. So because of this, once they're merging means any net asset of the subsidiary has to be at the fair value at the acquisition date. Okay. Even those that have not been recognized in the subsidiary separate financial statements. Even those, if you have not recognized the internally generated intangible asset in the subsidiary separate financial statements, still on consolidation you have to recognize it at fair value. That is the rule for IFRS 3. Okay. And intangible asset, okay, they're unique. Intangible assets are unique, and because of that it's not easy to identify and assess their value. This is from the business combination point of view of point we are talking. Intangible assets are unique. You cannot measure them. It's not easy to identify and find their value. And valuation, that means they are more complex. Valuation method is complex and subjective. You have to use your professional judgment sometimes to put a value. When the intangible assets are not based on legally enforceable right, their value is not even based on some legally enforceable right, it becomes more harder, more subjective. And in some cases, you have to see the reason why the acquirer have done this. So they does not intend to use the intangible asset. For sometimes, okay, they do not even intend to use this intangible asset, the one who have acquired the intangible asset. For example, in this case, you can refer this to this case study. Why did Corbel acquire the brand of Genji? For defensive reason. Not to use that intangible asset. What's the defensive reason? To defend themselves. They know the value of the brand, right? So for this reason, it raises further issues with regard. That means this brings more challenges because your requirement is about challenges. Challenges are measuring intangible assets. So this raises further issues with regards to arriving at a value. That's why this makes it more harder for you to find a value. Okay. Now, coming to part B, what the Genji brand. Okay. Still, if you see the answer, even though we didn't read the case study, it is about IFRS 3, only they are mentioning. And regarding cash generating unit, you have to talk about IS 36, impairment only. Under impairment only, cash generating unit is there. Okay, before we go to the second point. Rest all will be easy after you have answered the first part of B. Okay. Whether they should be accounted separately from goodwill, the brand name, and whether it should be accounted for as a separate cash generating unit. Let's read it. So we have to read the acquisition of perfume brand. Okay, we don't have to read their primary store and all those things. This will come later, the later requirements. So in addition to now owning, they have acquired 2 other perfume brand name to prevent rival companies acquiring them. Defensive strategy. So the first has been sold successfully for many years and has established market. Second is a new perfume which has been named after a famous actor who intends to promote the product. Directors believe the 2 perfume names have indefinite life. They believe. You have to question this. So now the question is, can you write it separately from the goodwill? So now it's about brand. According to IFRS 3, you have to state the rule. What does they say? IFRS 3 says that the acquirer, the one who have acquired, they must recognize this identifiable intangible assets separately from the goodwill in a business combination. If in a business acquisition, that is during acquisition and merger, if you have got any intangible asset, okay, if it is recognized, should be recognized separately from goodwill. IFRS 3 says that. So that's why it's very important that you state this rule, because the requirement only asks whether you have to report separately or together. So to be identifiable, The asset must be separable or arise from contraction. So that means for intangible asset to be separated from the goodwill, that intangible asset alone, they must be separable. You can separate them from goodwill. And also, they must arise from some contractual or legal right. Okay. So in this case, you can say this brand is intangible because no physical substance. And also it meets the definition of an asset also. Because from this you can generate future economic benefit. How? By charging higher premium prices. Okay. You can increase the sales volume also. You can get a revenue. Okay. How can you increase the revenue? Either you are selling a higher volume of perfume or you are charging higher prices for the brand and getting it. So because of this shows this a feature that you can take it out. You can separate this from the goodwill because you can sell it separately. You can charge high prices and get amount from that money, income. So brands are separable, and you can dispose also. You can dispose the brand. You can sell the brand separately. So in this case, brand is a separable intangible asset, and they must be recognized separately from goodwill. This is your conclusion. Always try to give the conclusion what the requirement asked. If the requirement asked, should it be recognized separately from goodwill? Your ending has to be yes, it should be recognized separately from goodwill, or no, it should not be recognized separately from goodwill. The reasons you'll be giving above. First, you'll be giving reasons, then only you will say yes or no. It's like a yes or no question, okay? Now we are moving to the cash generating unit. So for cash generating unit, start with the definition of CGU under IS 36, sorry. Okay, small identifiable group of assets that generate cash inflows that are largely independent of cash inflow from other assets or other groups of assets. This is from here to here, it's copy paste. CGU definition. I don't think I have to explain anything here. Already it is explained in IS 36. So according to this, always try to bring out what is brand. Brand rarely qualify as a separate CGU. Brand rarely qualify as a separate CGU. Brand does not qualify much as a separate cash generating unit. So in this case, they are likely to qualify as a corporate asset, the brand. Why? Because the brand does not generate cash flows independently of other assets. See, this brand, if it is used in your company with some other asset, it will help your company in getting reputation and all those things, correct? Or maybe getting a customer. But independently from the brand alone, you cannot generate cash flow. You cannot do that. So they are not independent from other assets, the cash flow. And also it is not attributable to just one single, therefore it should not be attributable to one single cash generating unit. Okay. Instead, it provides benefit across the business. So it is not just only for the one cash generating unit. The benefit goes across the business for the brand. Okay. So what does it mean? It means the brand should be allocated to each of the Corbel's cash generating unit. If they are having 5 cash generating unit, this brand should be allocated among the 5 because benefit will go everywhere. All the 5 will take the advantage of this brand, and they are expected to benefit from the synergies there because of combination. Okay, this looks a little bit dull and boring, but what else can be done? Whatever question is asked, you have to do, right? You don't have an option that ask me this question because I know more about this, or don't ask me this question because I was not prepared. That option is unfortunately not there. So the next is, wait, it is intangible asset with indefinite useful life. Whether the two should have indefinite. Okay, again read the requirement. See, I forgot. This will happen to you too. You will forget lots of information in your head. How to account with indefinite life and whether this two can be regarded as having indefinite life. So many things are there. If I ask you, 3 requirements are there. Okay. So quickly talk about the things. Okay. How can you know that it has indefinite useful life or not? Talk about that first before you come to the two company. So IS 38 says that intangible assets will have indefinite useful life when there is no foreseeable limit to the period asset is expected to generate cash flow from entity. This is repetitive. And if there is an intangible asset which does not have a definite useful life, you cannot amortize it. It's not amortized. This thing is very common. You can write it. Now, we are moving to IS 36. Okay, so IS 36 says what? You have to test an intangible asset. If an intangible asset is having an indefinite useful life, you have to test for the impairment. Annual basis, annually, every year you have to see whether there is any impairment or not. You have to review for it. Okay, next, what about those that are not amortized? For example, the useful life of an intangible asset that is not being amortized, what should you do? They should be reviewed each period to determine whether events and circumstances continue to support indefinite useful life assessment for that asset. Okay. For example, every year you have to see whether it is still indefinite useful life or not, or can you assess the useful life after this. So sometimes it happens that in intangible assets from having indefinite useful life, it becomes having useful life, and sometimes it's the other way around, from definite to indefinite. Okay, so you have to assess for that. Just you have to see for the facts and the circumstances, because every year you have to prove, you have to justify that no, this year also it is indefinite useful life, not only because it was indefinite in the past year, so this year also it should be indefinite. No, every year you have to do this. So what happens if they do not, do this review? Then, okay, any change in the useful life assessment, that means from indefinite to finite, if it becomes, then this change in accounting estimate has to be dealt under IS 8, because IS 8 only deals with changes in accounting estimate policy and error. This is a change in accounting estimate. Useful life is a change in accounting estimate. Please understand. It is not an error or it's not a policy. That means you have to account for it prospectively. You don't go back and change the figure. From currently and future you change. Now we are coming to the two companies, Locust and Clara, and seeing whether it has an indefinite useful life or not. So one by one you can deal. Okay. So various factors you have to see, such as you can list the factor and then see whether those factors are there in the two companies, or you can give one by one the company. So in this answer, if I can see, what I can see is first they have mentioned the factor, then they applied it in the two company to see whether those factors are present or not. Okay. So number one, brand name. They have to see whether this brand name uh, can they be considered to have a useful life. Okay. How will you know whether it will have a useful life? There are some evidences to this. How will you know? How much they are supporting the brand? Number one, if they are supporting the brand for a longer term, useful life will be long. Okay. If they believe that this brand will have a long term potential, useful life will increase. And if it has some proven success, you expect in the future also it will be successful, your useful life is extending because of this. Okay. But what about perfume? Now the time comes when you have to talk about the perfume sector. It is subject to the market. Which market? Very volatile market, which keeps changing very rapidly, right? Because it is about fashion trend only. Like fashion, perfume choices also changes every time. So how you have to make an assessment of how resistant these brands are to the changes. Every time the market changes, what brand today customers will like, tomorrow they might not like, tomorrow they might like some other brand. So you have to see how resistant they are. Okay, the brands are to the changes in the market. So these are the factors, list of factors you are writing. You will apply this to the two companies. Some of these points you might not have thought also about it. It's okay. Okay, because always remember your pass mark is 50%, so you can afford to make some mistakes, but don't uh, negligently make a mistake. Okay, you be aware. Okay, don't stay ignorant. Study as much as you can. You have to finish the syllabus, do all the questions up to your capacity. You should be able to do. Okay, if you're able to do something and you're not doing thinking that okay I will make it up, then it's not wise. Okay, but in this case you have to see the reason also. They have purchased this brand as a defensive measure, so that they can defend themselves from a takeover being happening, right? So because of this, there's a doubt as they support the Corbel. Okay, sorry, as to the support that they may be prepared to give to the brand. Maybe they will not give that much support to the brand because their thing is just in the short term how I can defend myself. After that, they might not think about the brand maybe. Okay, so just read the tutorial note for once. Even without the detailed knowledge of IS 38, you should be able to reach reasonable conclusions using common sense. Common sense, which is not so common. Yes, I wish it was, but it's not, sadly. So, not every question. Sometimes when you're stuck somewhere, you forgot the rules of a standard. Use your common sense. Sometimes your common sense will give you guide you to an answer. Okay, you should not shut your common sense and only memorize, 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 memorize. Okay. I'm sure God has given us everyone brains, so just make use of it also. If you forgot. Okay, now locust and Clara. So locust perfume, separate paragraph. Okay, mention it in separate paragraph. So it becomes very easy for the examiner also to give you marks. Okay, so if you see the locust, see it's only in one or two lines. Okay, so locust has sold successfully. This is from the case study. They have sold successfully in the market for many years. That means they deem to have an indefinite life. For them, it's okay. You can say yes, they have an indefinite life. Because you cannot say 4 years, 5 years. Successfully for many years, they have been in the market. So for that many years, how many years it will go, you cannot identify. You cannot measure. So for them, it's correct. What about the Clara? Clara's popularity is linked to the actor purchasing and endorsing it. So in this case, it is very difficult to say that brand will have an indefinite life. Why? See, a popularity of the actor does not stay forever, does it? So there's a common sense. Do you need knowledge of IS 38 to say that? Popularity of the actor does not stay forever. It will change. Tomorrow, who is popular? Day after tomorrow, someone else will be popular. You never know. It keeps changing, right? That race is there. So it's not indefinite. It's definite life. Maybe 5 years, 10 years, 2 years, 3 years. Okay. So to say that this, okay, to say in this condition for the Clara perfume that the brand has an indefinite life is not correct. It's not reasonable because it depends on the longevity of the how long the actor is popular. It depends on that. Okay. So in the case of Clara perfume, difficult to state that brand will have an indefinite life. Thus, Clara is likely to have a finite life. For Clara, it will be a short life, but for Locust, indefinite life. Now I hope that your doubt is more clear and now you have become more aware also on how to set up answers also. Setting up answer is a skill that you need to know. You will be having all the resources in the world, but if you don't know how to bring all information from all the resources and put together in one and write a proper answer, if you don't know that, then it's a big loss for you, right? I think that is an area where ACC students need more guidance, right? That's the reason also they keep failing because they don't know which resource to take, from where to take. Okay, writing is not a thing. Writing anyone can write, but to know from where, which place, the it's more important. Now we are coming to the proposed closure. Okay, this is mostly regarding your IFRS 5 non-current assets held for sale, but we'll read the thing. We're in the third. Okay, so for that we only need this paragraph. That's it. Plan plan to close and sell stores. Yes, so they approved and announced a plan to close and sell 6 Italian on 31st December 2007. Date is very important. They have announced, and okay, 6 stores will close after liquidation. Sale will be last for 3 months. After 3 months it will be sold. Management have committed to a formal plan. Okay, formal plan is there for the closure of the 6 stores and have also started an active search has been started to find a buyer for that asset. Why the stores are closed? Because there's an increased demand that is generated by the internet sales. That's why physical stores are closed. Attention is focused towards internet sales now. Also, a local newspaper have written an article saying that 30 stores may be closed with a loss of 500 jobs over the next 5 years. They denied this case, okay? The directors denied this case. Primary store is for the last requirement. So, for this piece of information, I will be able to write the answer. Proposed closure. Which standard? Sometimes you might feel like it is IS 37 provision. And sometimes it looks like IFRS 5. See, when you're more confused between the two standards, right? Sometimes it looks like that this may be the standard, sometimes it looks like that might be the standard. When you're more confused, check again the information. See which information you're having more for a particular standard. Are you having more information that is relevant for IFRS 5, or are you having more information that is relevant for IS 37? Which out of the two can you write more on? If you think I can write under IFRS 5 more using the information given, then go for IFRS 5. If you think you can write under IS 37, that is your provision, go for that. The reason why I'm telling you is this, because not everyone thinks the same. Some of you will be making this mistake. Some of you will be having an incorrect standard. You will be picking up. No matter how much you are taught and you have practiced, chances are there, right? After all, at the end of the day, we all are humans. We're not machines or robots. We will make mistakes. You have to accept the fact that you're going to make a mistake in the exam, no matter how prepared you are. Even in the mocks, if you're getting 70s, 80s, 90s, somewhere or the other, okay? You can never say that I'm not going to make any mistake. I'm perfectly going to answer each and every requirement I've identified correctly. No, that will not happen. If that happened, you would hear people getting 100, right? It never happens. So limitation is there. Understand your limitation. That's the reason that if you're confused, don't stay confused and don't leave it unattempted. That's the reason I'm trying to emphasize more on. I'm bringing this point out so that I tell you that please do not ignore the question or do not leave it unattempted. Attempt the question. Okay, whichever you feel more that you can write more on, go with that. But in order to identify a standard better, see, this is an IFRS 5. First of all, why? Because you are planning and selling, right? You are selling stores. It looks like provision. Why? Because it looks like that it's a restructuring provision, that you are going to lose this, what is it, jobs are going to be lost. You have announced the plan, formal plan is there. Looks like provision also, because in provision also restructuring you need all those things, whether there's a formal plan, right, whether sale is going to likely to take place, jobs are also lost, right? But if there's a restructuring, they will mention the word restructuring, they will mention the word. Then the question would be, can restructuring provision, whether it should be recognized or not, the question might be different then. Some way or the other, that Hindu, that one word is there for you to identify the correct standard. But nothing has been mentioned about restructuring. Okay? Nothing has been mentioned about that, what is it? Staff are going to be made redundant. This is the cost, right? And what is it? Something like that, right? They have not mentioned. So this is a non-current assets held for sale. Why? Some factor is there. What are the factors? Formal plan is there. Buyer, you have started the search for a buyer. Okay, so these factors are there. So here you have to identify the factors for non-current assets held for sale. That's it. This is very simple. So according to IFRS 5, maybe somewhere you need the help of IS 37 also, if you see. Okay, but we'll come to that later. First we'll finish the IFRS 5 because that is a major standard. Okay, so according to IFRS 5, they say define what is a disposal group. Disposal group is classified as held for sale if it is carrying amount will be called. This is from textbook, copy paste. Okay, I mean, you don't copy paste, write in your own words, but definitions and all you can write as it is, if you can remember. So for IFRS 5 to classify it as held for sale, some conditions has to be satisfied. For example, it has to be available for immediate sale, whatever the condition it is in. And the sale also, the probability of the sale taking place should be very high. If these two conditions are met, you can say yes, it is held for sale. Now we are going to use a case study. So in this case, there is a formal plan also for the closure. Active search for the buy also has been done. So these two conditions are there. Sale is likely to be highly probable. Probability is there because formal plan is also there. Active search for the buy is also there. So once that liquidation sale is over, stores will be available for immediate sell. Immediately you can sell. So this is the point at which they should be classified as a disposal group held for sale. Understand the point also, from which point they will be taken as non-current as a sell for sale. From this point, after that liquidation, because then it will be available for immediate sale. Now, what about before it is classified as a disposal group? So IFRS 5 says for that also. Before it is classified as a disposal group, or the disposal group is held for sell, sorry, before classified as held for sell, what do you need to do? That also you have to write in your answer. Even though the question is not asking you, but you have to write it's a part of an answer. Okay. So until that point, any assets and liabilities, the carrying amount within that group have to be measured in accordance with the applicable IFRS standard. We don't know what asset it is. If it's an intangible asset, IS 38. If it's a tangible asset, IS 16. Whatever asset. If it's leases, then another standard, IFRS 16. So it could be any standard. According to applicable standard, you measure it in a normal way only. But after it is classified as held for sale, then this disposal group you have to measure at the lower of carrying and the fair value less cost to sell. This is from IFRS 5, you know it, right? Lower of carrying amount of fair value less cost to sell. Now bring this to the 6.2. You have to identify whether they should be presented as a discontinued or operation or not. For that, you have to see whether they are distinct or not, whether there is a separate geographical area for the 6 stores or not. So the 6 stores represent a component of the company because they are separate geographical area of operations. For example, Italy. We know that in Italy there are 6 stores. It's a separate geographical area for the company. That's why once it is classified as held for sale, then they should be presented as a discontinued operation in the statement of profit and loss. This you have to write. If you're not writing it, you will not get full marks. So don't forget the discontinued operation part. Most of the students forget that part. They just stop with the held for sale. Measure the lower of cost on net realizable. Sorry, carrying amount of fair value less cost to sell. No, you have to write this part also. The 6.2 is a separate geographical area. Therefore, present as discontinued operation in the statement of profit and loss. And the last 3 lines may be small portion is maybe regarding IS 37. So there may be a need to provide for additional cost of closure. If there are any additional costs because of this closure of stores, one such as redundancy cost will come under IS 37. That the thing which I have been mentioning about. Okay, there may be a need because what happens usually when they are closing, employees will be made redundant. All right, 500 jobs are losing, so that will be taken as a provision under IS 37. Okay. Now, suggested closure. Just wait a minute. This is the proposed closure. This is the suggested closure. Why suggested? Okay. Read the requirements again. If you're having any doubt in the answer that is given to you, always go back and refer your requirements. Proposed closure and suggested closure. 2 closures are given of the remaining stores. How many stores do they have, by the way? Did they give the total? The last paragraph, I cannot see any number, so they didn't give 30 stores. Yes, out of 30 stores, 6 they are closing. What about the 24 stores? Sorry, up to 30 stores may be closed. Okay. So now you have to talk about the newspaper article, about the remaining 30 stores that will be about to close. That will come in the next part. Before we finally go to the primary store. Okay. Just read the tutorial note to get an understanding. Without any formal plan and formal announcement, the suggested closures are unlikely to fall within the scope of IFRS 5 or IS 37. It will not fall under this also, under that also. If there are no formal plan and no formal announcement. For both, you need a formal plan and a formal announcement. You have to announce the people who are going to get affected by this. You have to have a formal plan. Okay. So Under both, you need, right? Formal plan and formal announcement. But this is just in a local newspaper article, right? That they are going to shut 30 stores with loss of 500. This is from your case study. Copy paste it. 30 stores, loss of 500 across the world over the next 5 years. But there is no formal announcement by the company. Did company made any formal announcement? No, company should make the formal announcement. They should say, we are going to close 30 stores, we are going to lose 500. Like how for the 6 stores above, they told. They started finding the buyer also. Not in this case. This is just from the local newspaper. They have given an article. So in this condition, sale is not highly probable. Always find whether sale is highly probable or not. Okay. So because of this, it will not qualify as held for sale. This stores, the 30 stores will not qualify as held for sale. And because it cannot qualify as held for sale, it cannot be presented as a discontinued operation. Also remember, when something you are presenting as a discontinued operation, it first has to classify as held for sale. If it does not qualify as held for sale in the first stage, don't think about bringing it into the discontinued operation. It does not make sense. How can it be discontinued operation if it's not held for sale, if it's still there? So this store should be continue to be recognized. You still have to, don't stop at this stage. If you're saying you should not do something with it because it's not qualified, instead what they should have been done, you should answer that. So this stores should continue to be recognized. You should continue to recognize and depreciate as normal. Depreciate the stores. They are assets. Okay. The last para. Without formal plan, it is feasible that the closure of the additional 24 stores will not take place. Okay. Additional 24 means 6 and 30. 6 already closed, so without formal plan, it is feasible that the closure of the additional 24 stores will not take place. That means it looks more feasible that additional 24 stores will not take place, the closure. Because behind every closure, there has to be some plan. Right? When you're taking an action, right, to open a show or to close a store somewhere, you just don't do it by instantly like that. No, you have some plans, right? Some formal plan is there. You have it in document. You have discussed the plan with someone in the board meeting. Some plan is there. Without the plan, you don't make such a shift. You don't move like that. So because there is no formal plan, you can say yes, the closure will not likely to take place. The 24 stores. So first, this up to this part, you have been dealing with IFRS 5, that it is not held for sale. Now you are dealing with IS 37 in the last para. Okay. It's few line because IS 37 not much is there. Okay. So this means no formal plan means no obligation exists that you have to restructure. Okay, selling something when you're selling a store or a branch or subsidiary is a part of a restructuring only. What is the meaning of restructuring? You're restructuring your system, your portfolio. So restructuring. So no obligation exists to restructure according to IS 37. So no restructuring provision should be recognized. 1 mark you will get for this. It's not held for sale also. It is not, no restructuring provision also should be recognized for this. Now we are coming to the last, finally, primary store. Okay, so read the requirement again. I forgot. I'm sure you also forgot. There is no harm in checking multiple times. It's in fact better for 4 marks. This one is for 6 marks. Maybe you can divide it among the things. Maybe you can say 3 for closure, 3 for suggested. Out of this 3, maybe you can say 2 for IFRS 5, maybe 1 mark for IS 37. Same for the balance, right? This is 4 marks. 2 marks whether primary store should be tested for impairment. 2 marks whether internal sales can be attributed to this store. That's how you'll get the 4 marks. Anyway, we'll see the marking scheme at the end, but for now, that's it. So it's kind of looks like that is very common, right? You see the answer? It's very different. IFRS 5, IS 37, IS 36, IS 38, we have everything. Now, coming to the impairment. Should this be tested for impairment? The Prime Minister, oh, we didn't read the requirement, by the way. It's the case study. Their primary store is located in central Paris. It only has recently been opened as significant loss with the result that management believes it will make a loss in the current financial year. This loss making is not a concern as the performance is consistent with expectation for such a new and expensive store, and management believes the new store will have a positive effect on their brand image. If impairment testing of the primary store were to be required, they will include the cash flow from instances in this assessment. Cash sourced via the internet are sourced from either the central distribution center or individual stores. Internet sales are either delivered to the customer's home or collected by the customer from the store supplying the goods. Okay, you can definitely read slower. I like normally read very fast, but just for your understanding, I'm reading this. Okay, usually I read at twice the speed that I'm currently reading in front of you. For 4 marks, also this answer is quite lengthy, but it's okay. We'll break down. Okay. For impairment, what do you have to do? At the end of each reporting period, you have to assess whether there is any impairment of indicator of impairment or not. Indication of impairment or indicator of impairment, right? And this could be internal or external also. Internal factor, external factor. Okay. So how do you indicate that impairment has occurred? You look at the performance of the asset, whether it got worse than expected or not. Now link this with the primary store. First, always you have to state the basic impairment principle, then give the link it with the case study. Okay. So the primary store is performing in line with expectations. Already they told, and also they are going to have positive image, right? So this appears that there will be no indication of impairment and no impairment test is therefore required. As simple as that. 2 marks we will get from here. Okay. Now we are going to get the other 2 marks for the second requirement. Tutorial note, you can read it on your own. Okay. We are just going to go to the answer. So if the company feels that the primary store benefits all other stores, okay, from a brand perspective, we are looking from the point of brand. That means if you're having a brand, it's going to benefit all the other stores if you're having a primary store. Okay. There is an argument for treating the store as a corporate asset. So there is an argument that you can treat the store as a corporate asset and allocate its carrying amount to the cash generating unit when you're testing for the impairment. This is the second requirement we are answering, by the way. If you can remember the requirement. And whether internet sales can be attributed to a store, this part. For impairment when you're taking, because they have took the sales of the internet in the store for impairment. Can you do that? Right? That is the question. So it is likely that management assess performance store by. So when you are managing, assessing performance, what do? They go by store, no? Store by store they see. For example, I have 3 stores. Each store I will check separately how they are performing. Store 1, store 2, store 3. So this, because of this, store by store means, okay, each store is a separate cash generating unit because from each store you can generate cash. If I am not having store 2, for example, tomorrow, from store 1 and 3 I still can get cash, right? So cash 1, cash 2, store 1, store 3. So each store is a separate cash generating unit. Whenever you say that can you allocate this to that, you have to mention about cash generating unit only. So this primary store is a separate cash generating unit because they can generate cash flow independently. That too, independent, they can generate cash flow on their own. You don't need the other company assets. So now we are going to talk about the internet sales because you have included this internet sales in the primary store to test for impairment. So the amount of internet sales included when calculating value in use for the purpose of testing the primary store for impairment will be one of the quantity sales that are sold daily from it. If you are taking majority of the quantity of sales that are sourced directly from the internet sales, yes, then you can take it. Okay. Value. What is the meaning of value in use? How do you find impairment? This I need to break down a little bit before I go to the marking scheme in the examiner's comment. Okay, before finishing this, maybe we can go to the marking scheme and just check the points. Okay, first one mark per point. for the major challenges. That means 5 challenges you have to write. Part B, brand. Okay, and allocation of brand to CGU, 2 marks each. Then indefinite life principle is 2 marks. And application this to the scenario to the two performing perfume brand, 4 marks. NCI for cell, 3. Application this to the scenario is another 3. And part B, finally, impairment principles, 2 marks. Impairment of primary store is another 2 mark. Okay. So candidate examiner's comment will read at the end. Now, carrying amount minus recoverable amount. And this recoverable amount is higher of these two things. It's made up of fair value less cost to sell. When you are selling, you're using this one, the higher of this two. The other one is, for this we have no idea because you're not selling this thing. You're keeping it. Value in use. When you're using it, what is the value of the primary store? So that's why they told when you are calculating the value in use. Okay. See the amount of the internet sales that you have included when calculating value in use. Definitely, when you're using value in use, you must have used this internet sales there. Why? Because you want to test the primary store for impairment. So this will depend on what? The quantity of sales that are sourced directly from it. Okay, if the internet sales, let's say the internet sales are sourced from central warehouse or another store, not the primary store, then cash inflows should be excluded from the primary store's impairment assessment. Then you cannot include that cash flow into the primary store's cash flow and test for impairment. You cannot do that. You have to exclude it if it's that cash flow comes from other stores, central warehouse or another store. Okay, and sorry, should exclude the primary store's impairment assessment and included in the appropriate cash generating unit. Appropriate means, let's say if it is from the central warehouse, then that internet sales you have to include it in the central warehouse, because that central warehouse is then the appropriate cash generating unit for internet sales. Understood? You cannot allocate it to the primary sales in that case. In this case study, they didn't tell clearly it is from where they're sourcing it, the internet sales. Is it for central warehouse, another store, or is it from the primary store? If it's from the primary store, no problem. You can allocate to the primary store because primary store is a cash generating unit. But if it's not, then you have to take it out from there and put it in the appropriate cash generating unit. Another thing, how do you know it's calculating value in use? The word cash. You need cash inflow. Present value cash inflow is that's how you find the value in use, right? So if you see the requirement, sorry, the case study. Implementation of what they require, they have included the cash flow from the internet sales also in this assessment in the primary store to test for impairment. Understanding? That means value in use only, calculation of value in use. You need to calculate value in use when you're taking for impairment. Okay. Because here they told goods sold via the internet are sourced either from their central distribution or individual stores. So because of this, they have to be under appropriate CD. You cannot take it under the primary store. That cash generating unit is not appropriate in this case. Okay. That's how you will see also the ending of the answer. If you see the ending of the answer. Okay, clearly they told it. Source from the sun. So market scheme also we saw. Now we are going to see the examiner's comment before we end this video. So regarding part A, challenges to measure or recognize intangible assets. Okay. Okay. It is always a good idea to refer to conceptual framework. Refer your conceptual framework when you have to answer such questions. For example, if you are mentioning relevant, reliability, materiality, verifiability, you will get marks. For example, you can say it's hard to verify intangible asset, the cost, the fair value, materiality in terms of material, reliability, relevance. So you can mention these are the principles of conceptual framework, right? Useful characteristics of a good information. So this always feel free to use conceptual framework. Okay, this conceptual framework is open to any question. You can use it for any question. Okay, don't feel scared or only you have to use it when a question on conceptual framework is asked. Otherwise, you should not use. No, no, no. That's a wrong approach. It is recommended you use it when you're stuck in questions like this. Now, coming to part B. Very little reference is there to the scenario. Part B means it includes all the four parts. Okay, key marks are missing. A lot of the key marks, something which is very easily you can get, students missed it. Also, the scenario and the requirements are linked. You have to link it. Okay, this the requirement, whatever they have asked you of the requirement is based upon the scenario only, completely, entirely. Knowledge question part is only very little. Okay, so if you are not using the scenario to the maximum, you cannot score good marks, no matter however much knowledge you have about IAS 16, sorry, IAS 36, IAS 38, whatever. Okay, all the relevant sections from the IFRS standard, you have to make use of it, not the whole. If you see also, if any terms for a specific IFRS standard, for example, you are mentioning IFRS 5, not all the terms under IFRS 5 is relevant for your answer. You have to check that. Okay, so don't memorize things from your textbook and try to pass this paper. It's not possible. Don't try to root learn things. Okay, you cannot learn the whole of the IFRS standard. For example, you are studying IS 36, let's say the impairment. You are studying each and everything, and you are trying to reproduce exactly the same thing what you have learned in the exam. It's not possible. You cannot do that. You should not do that. It's very bad strategy. Okay. Sometimes yes, sometimes you need some knowledge from the textbook where question is asked. For example, if a question is asked, what is the advantages of this? Or maybe in your textbook you have learned all those advantages. That time, yes, you can use, but not always. So you have to see the type of question. So that's it for question number 29. And regarding section B, some of the questions I have done, right? So I think around another 20 questions I have to do. So after that, we'll be over with all the SBR questions from SBR revision kit. So keep practicing, right? As you know, exams are coming. What is it? October is ending. We just have the November month to practice for SBR. So 1 month is not less. It's a quite big amount of time you have with you. So practice, 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 and best of luck. See you in the next video.